we're real estate focused here at People's Capital Group. And the bottom line is, what type of investment strategy do you have, right? You have a long-term investment strategy for this $80,000. Do you have a short-term goal? And really, you want to have a little bit of both. But you want to be invested long-term, because the whole idea of investing passively is that you're investing for tomorrow, not today. I just had a child here, my first child, my wife, Diana, and a nice, beautiful baby boy. And it gets you thinking about, 10, 20, 30 years from now. All right, ladies and gentlemen, it's Aaron Fragnito with the Passive Cash Flow Podcast. We're going over an exciting topic today: how to invest $80,000. Now, some episodes on the Passive Cash Flow Podcast include interesting guests that span dozens of different types of industries, all of which are required to successfully invest passively in real estate. Other shows offer an analysis of popular topics that pertain to people seeking to learn how to build passive wealth in real estate. So listen and enjoy our off-the-cuff podcast here, not scripted and made to entertain, educate, and help you create passive wealth in real estate. Also, to learn more about how we help people create passive wealth in real estate and have been doing so for the last 10 years or so, go to peoplescapitalgroup.com and you can learn more about how we do that and how we help people pass. We're going live today. This is a new thing we are doing. We aren't usually live on the Passive Cash Flow Podcast, but we're going to go over an interesting topic today. And the topic today is how to invest $80,000. Now, the reason I'm picking this amount of capital is because $80,000 is a very popular amount that we find that people are looking to invest. Generally between $50,000 to $100,000 is generally what someone's looking to put to work, maybe in a real estate syndication, or make a larger scale investment for your average sophisticated or accredited investor. So this is a good amount of money to talk about as far as seeking how to invest this amount of capital. And of course, I want to preface this by saying it's not investment advice, tax advice, or legal advice. And also, whenever investing, you want to always diversify. That's the bottom line. So as a real estate investor, I'm going to talk about a number of ways to invest in real estate, because we are a real estate focused podcast here. But I'm also going to talk about how to invest in a number of other assets, including the stock market, and the pros and cons of investing in both. So let's break into it right now. How to invest $80,000. Maybe you worked hard to save up this capital. Maybe you inherited this capital, or you made it from investing in other profitable assets, and now you're refinancing out of a property, or you did well in the stock market. You're looking to move some of that capital into a different market possibly. So we're going to start with real estate syndication. Obviously, we're Real Estate Syndicate here at People's Capital Group. I know a lot about this space. I know that it's very popular right now for people to say, hey, I do very well in the stock market, but it's had a good run. I'm looking to take some capital and diversify maybe a third or half of my investment into a different asset class. Maybe you're self-directing your IRA, or just taking some hard-earned capital that's done well, and now you're looking to put that in real estate. So real estate's a very management-intensive asset class, and what most people end up doing is investing in a real estate syndicate or syndication. What that means is essentially we're pooling capital together to buy a larger building. This allows us to buy a building that bigger is better in real estate, more units under one roof. That allows us to create better cash flow for our investors and build more wealth through time as well. And we focus on buying in the North Jersey market, but you can invest in syndicates anywhere. There's tons of them out there. It's a very popular space. It's quite a saturated space as well now. And that's because it's getting more and more popular to invest with professionals in the real estate market. I think a lot of people have tried other avenues, such as investing themselves and being the property manager, or just in buying a single family home or things like that, and figured out maybe the easy way or the hard way that working with professionals, pulling capital together to buy a larger scale building and getting updates and headaches is generally the way to go when investing in real estate. But listen, when you're doing that, it's a longer term investment. It's generally a larger investment, generally around 50 to 100,000. So 80,000 would fit nicely in there. But it is a longer term investment. For our real estate syndicate, we're looking at about a 3 to 5 year minimum investment. And really, we have a very long term view of real estate, but not every syndicate has that. There's other syndicates that have a shorter term, shorter investment period. So you might want to find the right fit for you. And of course, there's different markets and different ways and different types of real estate to invest in. And we have other podcasts going over all those investment strategies as well that you can check out at our website. Another option for how to invest $80,000 would be a real estate investment trust, also known as a REIT. Now, I'm going to focus on a publicly traded REIT here. There are privately traded REITs, which are essentially similar to real estate syndicates. But let's talk about publicly traded REITs, which are stocks backed by real estate. Now, the biggest benefit of a publicly traded REIT is that you can break into actually owning real estate, but it is not actual real estate. It's a stock backed by real estate. So the benefits of that are it's very liquid. You can invest today and pull your capital out tomorrow, but liquidity means volatility as well. See, the main difference between a REIT and a real estate syndicate, which was our first option there, is that a REIT is a stock backed by real estate. A real estate syndicate is a fund that owns a building or maybe a collection of buildings. So ideally, you can invest over more markets and more buildings more easily with a REIT, but you are really getting into a volatile market and you're still in the stock market. You're not actually out of the stock market if you're in a REIT. So to truly diversify out of the stock market, if that's your goal, and I do suggest diversifying some capital out of the stock market, because being fully invested in the stock market is not true diversification, in my opinion, then buying a REIT actually isn't getting out of the stock market. A publicly traded REIT, of course, a privately traded REIT is a different story. But we're talking about publicly traded REITs, and you want to actually focus on having perhaps some investments in REITs. They do pretty well. They produce strong dividends. They are liquid, as you can get in and out of them quickly, but it is not the same as a real estate syndicate, which is solo from the volatility of the stock market. It does not go up and down with the stock market as stocks do, of course. So the main goal there is to focus on diversifying some capital into actual brick and mortar real estate that's managed by professionals. Let's say, okay, I do want to own brick and mortar real estate, but I'm not ready to hand off the reins to real estate professionals. I want to try managing myself, or maybe you own some properties and it's pretty easy to manage and you want to build that portfolio up. So another option for how to invest $80,000 is to buy and own rental properties yourself. Maybe you hire a management company. They can manage the property day in and day out and bother you with the details. And what I found was that in time, management companies really just treated me like a number on a screen, and I wasn't getting the performance I was looking for out of them. So we ended up developing our own management company to get good profit out of our rental properties and good performance out of them long term. But that's not everyone's experience. That was just my experience. And a lot of people have good experience with management companies and owning properties themselves. So this is an option here. However, it is very different to own a management company, own an investment property and manage the management company, as opposed to investing in a real estate syndicate. See, a real estate syndicate really is a hands-off investment. You're really just allowing the professionals to do the day-to-day operations, manage the management company, and send you either monthly updates or quarterly financials. But when you're owning investment properties and you're hiring a management company, you're still the CEO, right? You may need to fire that management company and hire a different one. You are still running the day-to-day show. You need to catch mistakes the management company makes. You need to say, hey, you know what? That vacant unit's been on the market for 3 months now. What's going on? And what's the issue? Maybe it doesn't smell right, or doesn't look right, or maybe the construction wasn't done, or something's not working in the building, or it's priced too high and it's not marketed properly. So, there's tons of different moving parts to managing property, getting peak performance out of property. And quite frankly, I found that most management companies are really looking to do more of the minimum amount of work to get your building to hit the minimal amount of cash flow it can, and not go above and beyond and achieve that extra mile. Now, again, you may know a management company that goes above and beyond and gets your buildings performing phenomenally, and that's great. But what I found was that we actually had to develop our own management company, which we did around 50 to 75 units, and it took that many units to make sense of it financially. And once we had our own management company in place, we began to flourish much more quickly as property owners. So house flipping. Okay, this is another option for how to invest $80,000. We're still focused on real estate here. We'll break into some other options within the stock market as well, and other alternative investments also. We're alternative focused here as well. But house flipping, I got to be honest, is the hardest dollar I've ever made in real estate is actually through house flipping. I find it very hard to flip houses. I found it hard to deal with contractors. You're taking an older home and renovating all these parts of it, all these moving pieces. You're opening up walls. We found a lot of challenges behind the scenes there. And it was constantly a battle to make sure our project stayed on budget and stayed on task there on the schedule. But we constantly found all the headaches of flipping properties. The resale markets are unpredictable. The timeline for how long you're going to own it, and then paying to own a vacant property and heat that and keep it powered was really adding up. So actually, in my opinion, making returns in real estate, it's easier to buy, renovate, and refinance properties. But if you're good at construction and you have the time to flip properties, then you could certainly take $80,000 and leverage it with a hard money investor and or a private investor and focus on flipping houses and making strong returns there. And I have made strong returns flipping houses. So I've also learned great lessons flipping houses. So you really have to know what you're doing. It's a very hands-on part of the business. And I wouldn't suggest getting in there if you don't know much about the construction side of the industry. You'd want to team up with a contractor, someone focused on that side of the business. Self-storage. So self-storage is a very interesting space. We're looking into self-storage right now. If you have $80,000 to invest, you may want to look into those options there. It tends to be a little less management intensive than apartment buildings. It's very a little more recession proof as well, similar to apartment buildings, and it also has a lot of growth, a lot of historical growth. So my only fear there is that in a recession, people are going to pay for their apartment before they pay to the rent for their junk, their self-storage. So it may be good at times right now, but it's not as recession resilient, I'd say, as apartment buildings. But self-storage is a great space, a lot of growth. I know the cash flow can be phenomenal on there. So you want to maybe look into REITs that own self-storage or different syndicates. Self-storage and apartment buildings are two high cash flow pieces of real estate that people enjoy investing in for cash flow. We prefer apartment buildings, but self-storage is definitely a viable option. And now let's talk about the stock market. So obviously the stock market has had a great run in the last few years, really the last decade. I took a little bit of a tumble last week, but who knows? You always want to have some capital in the stock market and look into different types of funds within that, such as mutual funds, and ETFs are a very popular way to invest. That way you're spread out over a number of industries and really diversifying properly throughout the stock market. Generally, those funds can tend to follow the performance of the S&P 500 or something like that, and get into tech stocks or energy stocks and try to, of course, be well diversified over a number of ETFs. And mutual funds is a good investment strategy with the stock market. But another way to invest $80,000 I want to touch on is an emergency fund. If you don't have funds saved away for at least 6 months of savings, of course, that is what you want to put these funds towards. You always want to have 6 months of savings put away to make sure if any unforeseen instances happen. Now, that doesn't mean it has to be in a savings account collecting 0.02 interest. You could put your emergency funds into maybe a cryptocurrency, a stable coin that produces anywhere from 3 to 9% interest per year. And of course, you want to work with a reliable, trustworthy cryptocurrency service provider there to make sure if you're investing in stable coins for long-term returns of your savings account, it's in a reliable, safe space that's not going to fluctuate. See, a stable coin doesn't fluctuate where regular cryptocurrency does fluctuate. So you might want to look into that. Individual retirement accounts, IRAs. So 401ks, solo 401ks, IRAs are a great way to put cash away and then invest that capital. And then the gains on those investments are tax deferred. So if you don't have an IRA and you have $80,000 to invest, look at starting an IRA. There are limitations on what you can put into it. Even if you combined last year and this year, you'd probably max out around $12,000 into your IRA. But you may be able to open something called a SEP IRA. That's for small business owners or perhaps a solo 401k. So talk to your IRA custodian or get in touch with People's Capital Group by going to peoplescapitalgroup.com. And we can actually help you connect with people that advise people on how to self-direct their IRA, because a third of our investors do self-direct their IRA. It's a very popular way to invest in real estate. So if you have $80,000 to invest and you haven't started a retirement account, definitely look into that. You can put the funds in the retirement account and then move some of that into different alternative investments such as real estate or stock market and diversify that IRA. High yield savings account is what we just touched on. There's different high yield savings account. The cryptocurrency market offers a lot of different options there. So if you're very weary of the volatility of the cryptocurrency market, a lot of stuff have burned there, me included, then you want to watch out there for the volatility of it. If you want to avoid that, actually stable coins are pretty interesting high yield savings account where the money is always liquid, is always there. It doesn't go up and down. It's always worth the same amount, but you get a high interest rate on that investment. And that acts like a savings account. So of course, you want to make sure you're invested in the right platform there as well. Money market accounts, okay, perhaps a bit of fun should be here. I'm not an expert in this space, but there's different ways to invest in money market accounts. I'm sure your financial advisor can guide you there properly. We're real estate focused here at People's Capital Group. And the bottom line is, what type of investment strategy do you have, right? You have a long-term investment strategy for this $80,000. Do you have a short-term goal? And really, you want to have a little bit of both. But you want to be invested long term, because the whole idea of investing passively is that you're investing for tomorrow, not today. I just had a child here, my first child, my wife, Diana, and a nice, beautiful baby boy. And it gets you thinking about, 10, 20, 30 years from now. Of course, I work with people to invest passively with that mindset all the time. So, of course, I'm thinking about that for myself as well and trying to make the right investments so that years from now, we have money coming in passively. And that's my goal, is to have so much passive real estate investments that I don't really initially have to worry about covering my costs. That's called financial freedom, right? Having more money coming in passively than we're spending on entertainment and living our lives and taking care of our families. So, of course, we all want to reach financial freedom. It's that elusive goal. And that's always our goal, People's Capital Group, is to get to financial freedom through investing passively. You really can't get there by working more jobs and more hours. Eventually, you run out of steam. So it's so important to invest passively with that $80,000 or whatever amount of capital you're looking to invest. Of course, that's just the amount we're talking about in this episode. And whether that's in the stock market and real estate syndications and REITs or different types of savings accounts we talked about, or more alternative investments, the bottom line is you want to be diversified over all those asset classes and well diversified throughout, and understand why diversification, but more so passive investing, is so necessary to get to that financial freedom, to reach that lifestyle you want or that goal of just not having to work so hard in the rat race. So go to peoplescapitalgroup.com. That's where we help people invest in real estate. That's where you can fill out a form to get qualified. We also have over 75 podcast episodes there. A lot of them have interesting guests. I just did a guest with a nonprofit. We had my first passive investor come on from years ago. She joined the show just the other day, so we just put that episode up. And we went live with this episode of how to invest $80,000. We talked about alternative investments. We talked about stablecoin savings accounts. We talked about real estate syndicates, talked about real estate investment trusts that are publicly traded stocks backed by real estate, and even mutual funds and ETFs. So there's tons more ways to invest, of course. I'm just touching on a number of them here in this podcast episode, the Passive Cash Flow Podcast. But hope you enjoyed this live episode. We'll put this up on our YouTube page. We'll put this up on our website, peoplescapitalgroup.com, and you can go there to learn more. Enjoy our blog as well, where we have tons of different articles about all different types of topics that help people passively invest in real estate. Hope you enjoyed our presentation today. Enjoy your day.